The five largest technology companies in the world, Microsoft, Alphabet, Amazon, Meta, and Oracle, are expected to spend $644 billion on AI infrastructure in 2026 alone. That number is up 79% year on year. To put it in perspective, $644 billion is more than the entire GDP of Sweden spent in a single year on artificial intelligence infrastructure. Today, I want to give you the honest analysis of whether this spending makes financial sense, what it means for your investments, what they are spending it on. Data centers, semiconductors, primarily NVIDIA chips, power infrastructure to run those data centers, cooling systems, networking equipment, software, and talent. The physical infrastructure of artificial intelligence at a scale that has never been attempted before in the history of technology. The return on investment question that is now dominating markets. For the first 2 years of the AI investment boom, markets rewarded the spending itself. Companies that announced bigger AI commitments saw their stocks rise. The narrative was simple. AI is transformative. Whoever spends most wins. That narrative is now being tested. As Meta's chief executive Mark Zuckerberg himself acknowledged, it will take time for AI investments to directly translate to revenue growth. Investors are no longer willing to wait indefinitely. The market has shifted from pricing and promise to pricing and execution. The semiconductor sales data that shows real demand. Semiconductor sales grew 79% year on year in the first quarter, 2026. In the second quarter, growth is expected to reach 132%. These are extraordinary numbers. Real companies are buying real chips in real quantities. The AI infrastructure build-out is genuinely happening at scale, not just being announced. The split between AI suppliers and AI customers. CNBC's Jim Cramer summarized the current market dynamic clearly. Wall Street is now rewarding companies supplying the AI boom rather than the tech giants funding it. Chip makers, memory producers, power companies, cooling infrastructure providers. These companies are benefiting from the spending without needing to prove AI revenue themselves. The customers, Microsoft, Google, Meta, Amazon, must now prove that their $644 billion in spending generates proportional returns. What this means for your investment strategy. If you own a broad market index fund, you own both sides of this equation automatically. You own the NVIDIA and chip suppliers benefiting from AI infrastructure demand. You own the Microsoft and Google building that infrastructure. You own the companies that will eventually use AI to generate new revenue. Index fund investing in 2026 gives you exposure to the entire AI ecosystem without having to predict which specific players win.